your bank. I, on behalf of the board members and the management, hope and wish for the safe and good health of all the shareholders and their families. Pursuant to the provisions of the Companies Act 2013 and circulars issued by the Ministry of Corporate Affairs and SEBI, this meeting being held through video conferencing or other audio-visual means. A live webcast of the proceedings of this meeting is also provided on the website of NSDL. The register of directors and key managerial personnel, the necessary certificates from the auditors, and all relevant documents referred to in the notice of the AGM are available electronically for inspection by the shareholders during the AGM. Shareholders who wish to inspect such documents may send their request to me. While we had provided the e-voting facility to shareholders, the same is also available to the shareholders during this AGM. Shareholders who have not yet cast their vote may cast the same during the meeting. Process for e-voting is already explained in detail in the notice of the AGM. Please note that shareholders who have already voted on the resolutions by way of remote e-voting will not be able to vote again at the AGM. Participation of the shareholders through video conferencing, other audio-visual means, is being reckoned for the purpose of quorum. I now wish to inform that around 91 shareholders are attending this meeting through video conferencing. Accordingly, the requisite quorum is present for the meeting. The annual report for the financial year 2022-23 and the notice convening this annual general meeting had been sent to you in advance through electronic and secretarial auditors have given unqualified reports. Accordingly, with the permission of the shareholders, I take the audit reports as read. With the permission of the shareholders, I shall also take the notice convening this meeting as read. Now, without any further delay, I request the chairman, Mr. Atanu Chakravarti, to continue with the proceedings of the meeting. Thank you. Over to you, Chairman, sir.
Thank you, Santosh. Esteemed shareholders, my distinguished colleagues on the board, and the senior management of the HDFC Bank, it gives me great pleasure to welcome you all to the 29th Annual General Meeting of the Bank. I would now like to introduce all the board members who are participating in this meeting through the video conferencing mode. Starting from my right is Mr. K.K. Mistry, Non-Executive Director and Chairman of Stakeholders Relationship Committee of the Board. Mr. Umesh Chandrasarangi, Independent Director and Chairman of Nomination and Remuneration Committee of the Board. Mr. Shashidhar Jagdishan, Managing Director and CEO of the Bank. Mr. Kaizad Bharucha, Deputy Managing Director of the Bank. Mr. M.D. Ranganathan, Independent Director and Chairman of Audit Committee of the Board. Mrs. Renu Kannad, Non-Executive Director. Mr. Sandeep Parekh, Independent Director. Dr. Mrs. Sunita Maheshwari, Independent Director. Mrs. Lily Vadera, Independent Director. Mr. Bhavesh Javeri, Executive Director. We also have Mr. Srinivas Vaidyanathan, the Chief Financial Officer of the bank with us. The representatives of Messrs. M.M. Nessim and Company, LLP, Messrs. Pricewaterhouse, LLP, Joint Statutory Auditors of the bank, as well as Messrs. Alvin J. and Company, Secretarial Auditor of the bank, and the legal counsels. They are all attending the AGM through video conferencing mode. As confirmed by the company secretary that the quorum for the meeting is present. With the permission of the members, I call this meeting to order. Friends, last year we announced the merger of our parent company HDFC Limited into the bank. I would now like to inform the members that we have completed the merger effective July 1, 2023, the planned dateline. This was possibly one of the largest such transaction in the history of corporate India. On behalf of the board and management, I convey sincere appreciation to the teams of both the organizations who persevered together to ensure a smooth and successful integration. Following the footsteps of late Shri H.T. Parikh's vision and values, the dedication and sagacity of Shri Deepak Parikh, who have helped to create this large financial conglomerate. On behalf of all the members, as well as the board, I would like to take this opportunity to extend him our shared sense of gratitude. As a consequence of this merger, the larger balance sheet of the bank would offer to the national economy possibilities of higher growth, a large bouquet of financial products for the customers, and higher flows into affordable housing, agriculture, MSME, etc. As a consequence of this merger, the bank is poised to benefit from the addition of the market leader home loan product, which can now be directly offered through the bank's large network of branches, helping a greater number of people fulfill their aspiration to be homeowners. The home loan business will also benefit from low cost of funds that a bank traditionally enjoys. It will also enable the bank to offer to its wider customer base a full suite of financial products like life insurance, general insurance, health insurance, investment products like mutual fund, by leveraging the strength of some of the major entities like HDFC Argo, HDFC Life, HDFC Mutual Fund, as they come into the bank's fold into your bank's fold as a result of this merger. If we have a look at the economy, the global economy during the year saw huge headwinds on account of continuing conflict between Ukraine and Russia, as well as soaring inflation. Central banks across the globe tightened their monetary policies, and this has led to increased interest rates. Such actions invariably lead to a decline in demand and employment, leading to deceleration in growth of the global trade and economy. However, India has stood out as a notable exception. For the last 2 financial years, it has been the fastest growing economy in its category. International Monetary Fund has projected that India would grow by 6.1% during the year. Such continuous growth would open up myriad opportunities in various sectors of the economy. This has been possible due to prompt action by RBI to control the inflationary tendency at its slightest hint of unfolding. Continued investments by central and many state governments in infrastructure. This has not only spurred growth, but also created opportunities for other sectors to grow. A virtuous cycle of sorts. On account of actions taken in the past few years, the financial sector in India is in robust health now and capable of pushing high credit flows, which invariably leads to greater growth. Financial inclusion at a massive scale and digitalization have not only spurred greater formalization of economy, but also reduced transaction cost. This has enabled technology-based innovations. India's GDP is expected to be in multiples of its current level over next decades, with concomitant growth in disposable per capita income across the board, with a massive uptick of private investments. This rise in per capita and disposable income will, after a point, result in huge uplift in demand inter alia for housing, automobiles, consumer durables, and increased proliferation of financial services. Deeper financial inclusion will enable near universalization in access to formal financing channels, which in turn will improve productivity and income levels and the growth potential of the products championed by the bank. Your bank is well poised to capitalize on this opportunity, both for financing private investment and consumer finance, aided by its low cost of funds, wider customer reach, and a large and very stable balance sheet. We feel privileged to be part of this growing and dynamic economic environment and India's growth story. Let me now highlight our performance for the last financial year. The annual report placed before you shows our robust performance in the last financial year, during which we grew our balance sheet and improved our asset quality. I shall now highlight some key performance parameters. Our balance sheet grew by 19.2% to reach a level of rupees 24,66,081 crores. Net interest income for the year witnessed a robust growth of 20.6% over the previous year to rupees 86,842 crores, and net interest margin was stable at 4.1%. Our net profit increased by 19.3% to rupees 44,109 crores for the year. Gross non-performing assets reduced to 1.12% from 1.17%. Our cost to income ratio is at 40% for the year. The bank's growth has been spread across its various business units, that is corporate and other wholesale loans that grew by 12.6%, commercial and rural banking loans that grew by 29.8%, and domestic retail by 20.8% over the previous year. During the year, we added 1,479 branches, including those in semi-urban and rural India, taking our total number of branches to 7,821, a fairly wide reach. We remain steadfast in our commitment to drive shareholders' value. The board has proposed a dividend payout of rupees 19 per equity share of rupees 1 each, in line with our stated dividend distribution policy. In the last financial year, we added over 1.1 crore customers and ended the year with a total of 8.28 customers. Improving customer journey is a never-ending journey in every organization, and your bank remains steadfastly committed to it. Friends, the bank lays great importance to governance and risk architecture. And your bank has grown consistently across business cycle, maintaining a very stable balance sheet as well as a stable asset quality. This has been due to a strong commitment to corporate governance and a robust risk architecture. This has been driven from the board and permeates across the organization. Various committees of the board met through the year to give guidance as well as maintain oversight. Oversight by the board of your bank would continue to lay emphasis on balancing growth with strong compliance, risk management, as well as an unwavering focus on customer satisfaction. Technology is a major differentiator between various performers, and your bank has a very sharp focus on technology, and digital continues to be the focal point of our transformational strategy. Modernization of applications that has been cloud native architecture and modern design active construct. Focus on self-sustenance by developing or co-creating our own IP in critical front-end platforms like mobile and payment application that have reduced outsourcing risk. Hiring and nurturing new age skills through enterprise factory construct that facilitates hiring of core architects, designers, and full stack developers. invest into creation of robust technology infrastructure through focus on observability, predictive capacity management, and real-time resilience. The bank has used the above strategic pillars and has made significant progress throughout the year, and many flagship programs like PayZapp 2.0, our new tech-powered payment app, Smart Hub Vyapar for merchants, Express Car Loan digital platform processing application, etc. They are just few of the examples of the digital transformation that your bank is carrying out. Our digital orientation grew to 76%, and our financial transaction digital penetration grew to 95% in FY 22-23. The bank will continue to invest in technology and be at the forefront of digital revolution that India is currently witnessing. The bank makes significant contribution to government schemes. To highlight a few, the government as well as RBI provided special support to MSME sector during the pandemic through various schemes such as interest moratorium, ECLGS extension, and COVID support loans. Your bank emerged as a star performer with the highest disbursal of rupees 44,823 crore in the ECLGS scheme, benefiting over 1.25 lakh customers. Similarly, it was the biggest contributor to Credit Guarantee Trust Fund for micro and small enterprises in the last financial year, further supporting the MSME sector. The bank is committed to supporting small and marginal farmers, taking its product to more villages, thus expanding coverage in rural India. Last year, we had reached customers in about 1.65 lakh villages. We plan to significantly enhance our footprint in the coming years. Our CSR initiative, Parivartan, which has programs in 27 states across the country, has impacted numerous households in a positive way. The bank also remains committed to efforts of government to address climate change and other environmental issues. Before I conclude, let me bring out key changes that have been made to the board since the last AGM. We are pleased to have Shri K.K. Mistry on board of the bank as non-executive director. Shri Kaizad Bharucha has been redesignated as Deputy Managing Director. Shri Bhavesh Javeri has joined the board as an Executive Director. Shri Sanjeev Satya completed his 5-year terms on the board with stellar contribution. Last but not the least, I would like to sincerely thank the Government of India, Reserve Bank of India, Competition Commission of India, Security and Exchange Board of India, Insurance Regulatory and Development Authority of India, National Company Law Tribunal, Ministry of Corporate Affairs, and all other agencies for helping us navigate through the complexities of the merger and also guiding us on many other issues of significance. Whilst I take this opportunity to express gratitude to our shareholders and customers for reposing their faith and trust in us, the board of your bank, the senior management, and all employees rededicate ourselves to serve in the best possible way. Friends, the country would celebrate 77th Independence Day on 15th August and enters its 76th year of independence. On this occasion, I sincerely wish you and your dear ones safety, well-being, good health, and prosperity. Now I'd like